Welcome everyone to another Monday Market Update with Kristen Mason Coreas, owner of the Homes by Mason team. Today is September 16th, coming to you with data from the national real estate market as well as locally. And of course, I'm getting notifications. I don't know if you're seeing my notifications pop up on my screen, but let's rock and roll. So interest rates, we usually start there. They are at the lowest level they have been in since February of 2023. That is big news, people. So 6.2% is the average for a 30-year fixed mortgage as of Thursday of last week. So that's huge. And the Fed meets this week and is expected to lower their interest rate, which may further lower the mortgage interest rate. We're not sure because this has kind of already been anticipating a rate cut by the Fed, so we might not see rates come down lower. But what I do also have for you today is the projections for 2025 of what interest rates will be. Now, these are projections. They change all of the time. I see these projections come out and then I see them change. But this is as of August and September 2024. The projections from Fannie Mae, the Mortgage Brokers Association, and Wells Fargo in terms of what they anticipate interest rates to be at next year in terms of Q1, Q2 through Q4 of next year. Wells Fargo is highlighted because this is the most recent data to come out, in fact. So they may be bullish perhaps, but more recent than these other projections says that we're going to be below 6 next year. When today we're at 6.2, I can believe that, frankly, because again, with the Fed meeting this week, there's a chance we'll hit this even this year. A chance. I don't know. We'll see. But that is, in general, good news for buyers, making homes a little bit more affordable for buyers. Now, prices are the other things we'll look at, and I do have projections for pricing in 2025 actually at the end. So you guys stick around to the end to see that. And in other news, so what impacts interest rates is down here on the bottom half. Inflation declined in August, reaching its lowest level since February of 2021, setting the stage for those expected rate cuts by the Fed that we've been talking about. Jobless claims rose marginally last week, so that also sets us up for lower interest rates. Wholesale prices showed a mild increase, reinforcing indications that inflation is returning to pre-pandemic levels. So because interest rates came down, you can see here that demand for mortgages increased by 1.4%. Purchase applications rose 2%. So you get two types of mortgage applications, either purchase or refinance. And refinances were up 1%. So overall, that shows that people are liking those lower interest rates and applying for mortgages as a result. In other news, which I don't normally talk about, but this is big news that I have been hearing again and again, so it's definitely worth mentioning. Homeowners are sitting on a ton of home equity. And God, I think it was like, oh, I forget the number now, but like more than half of homeowners own their homes outright. It was something like that, a stat. I think I shared it last week. And so why that's important is because those people who do own their homes outright or who do have a lot of equity in their homes, those are great candidates to be sellers, to selling their home. And so that's what we do want to see more of. So while interest rates have come down, inventory has been increasing, but we're still not back to where we would like to be. We'd like to have more sellers. This is the data for the Mid-Atlantic region, which includes Virginia, DC, Maryland, Pennsylvania, West Virginia, Delaware, and New Jersey as of September 8th. More of the same that I have been seeing. List prices are continuing to rise. Contract times are slowing a bit. The average for the Mid-Atlantic region is 24, and I actually think it's higher than that even in our area. I'll come to that shortly. New listings are increasing, adding to supply. We have been seeing those trends happening in the Mid-Atlantic region. So more of the same. Now for the DC metro area, days, median time to contract, I told you, I thought we were longer, 29 days in the DC metro area, which does include parts of Maryland. And so I don't know, I've said it before, I'll say it again. That number blows my mind. My average days on market is like 7, and that's partly by design because I put homes on the market on Thursday. These days I'm waiting until Tuesday, so I bake in at least 5 to 6 days anyhow. But yeah, so 29 days gives buyers a little bit of breathing room to make a choice on a home purchase. I actually have 2 buyers who I showed homes to this weekend who are thinking about making offers, and they had the luxury to sleep on it overnight. There have been other markets where buyers don't have that luxury. So showings are up year over year, 4.5%, and up a huge number, 30%. And that's because we're looking at some of the week before was Labor Day weekend. So that is to be expected. There was a lot more showing activity on a non-holiday week than the week before, which did include a holiday weekend. And purchase contracts are up a touch, 1.3% year over year, down 10% week over week. So that's interesting. Not sure what to make of that. Median time to contract increased by 6 days year over year and 5 days week over week. So again, that's an interesting stat that I wouldn't expect. Median list price is down a touch year over year, but up 1% from the week before. Again, I'm going to talk about pricing on my last slide, what the projections are for 2025. So stick around. Active listings are increasing 23.5% year over year and up 9% week over week. So more inventory and lower interest rates is in general a good thing for buyers. Did I miss a slide? No, I guess I didn't. So this is the hyperlocal data that Homes by Mason we run for you each week. So this data is from September 9th, this past Monday, up until yesterday, September 15th. And so contracts were down week over week by 20%. And that's because last week, the number of listings were inflated due to the prior weekend being Labor Day. So there were fewer listings the week before. People made up for it last week, and that's why we're down here to 431. This is higher than what the average was all of last year. So it was in the 300s, the average number of listings each week last year. So that's a pretty healthy number, 431 new listings last week. Under contracts, we had 358 in our hyperlocal area. Did I mention the hyperlocal area? It's here. Arlington, Alexandria, Falls Church, and Fairfax is what we're looking at here. So that number is up by 36% in terms of new under contracts compared to the week before. That's another good, healthy number. So, and let's look at year over year. So year over year, we have 23% more contracts than the same time last year in our hyperlocal area, and up 7% year over year for new listings. So the demand to supply ratio is 83%. So that's a measure of how these compare, how many homes were left over after you account for the number of homes that went under contract. So 83 is a decent demand to supply ratio. You can see oftentimes we're in the 90s, and in some cases we were above 100%. So there were some homes left over. Not as many, obviously, as the week before, which was the holiday week. So take that with a grain of salt. Home price forecast. I told you to stick around until the end. So for next year, and these are forecasts again, they could be wrong, but there's a number of industry experts here that we're looking at that have forecast how much will homes appreciate or not in 2025, right? We look at the market trends here to try to know what's happening and to try to figure out for you if it's a good time to buy or sell or invest. And obviously those are personal decisions, but what's happening in the market can help inform your decisions. And so some people out there want to think that prices are going to come down. We hear that all the time. The market's going to crash. I'm waiting for the market to crash. I think I did hear that recently from someone. I'm going to wait for prices to come down. Well, and this is nationally, in fact, now. So, different markets will behave differently, but frankly, we have one of the strongest real estate markets in the nation here in the DC metro area with a strong economy, buffered by all of the government jobs and the military that are here. Lots of demand for housing in our area. So nationally, the expectation is that home prices will go up next year. The highest projection is at 4.4%. The lowest projection is 0.3%. You can see in general, there are around 3%. So 2.6 is the average in terms of expectation for how much homes will appreciate next year. That's a modest increase, a manageable increase, not like the numbers that we were seeing in previous years. So it feels like the market is returning to kind of a healthy place. That's a nice place to be in. That is the money market update for today, Monday, September 16th. Thank you for watching. And if you ever want to talk to me about your circumstances individually and how or when might be the best time for you to buy, sell, or invest, feel free to reach out anytime. My phone number is 571-210-1866. You can call me or text me there. You can email me at kristen@homesbymason.com. You can check out my website, where you'll hopefully find some good resources at www.homesbymason.com. If you enjoy my Monday market updates, please follow me on YouTube and or Facebook. Those are the two places where I show up every Monday around 1 o'clock and do this live. Thanks again for watching. Have a great week and look forward to seeing you next week.